In 2011, $100 in Bitcoin could have changed your life. But here is the part nobody tells you. It depends on the month. If you bought near the start of 2011, that $100 could be worth over $20 million today. If you bought near the peak a few months later, it could be closer to 200,000. Still ridiculous, obviously, but that gap tells the real story. Bitcoin did not just go up, it tried very hard to make everyone sell along the way. At the beginning of 2011, Bitcoin was around 30 cents, not 30,000, not 3,000, 30 cents. So $100 could buy roughly 333 Bitcoin. Now imagine those coins at around $63,000 each. That is about $21 million. From $100, that is not a return, that is a financial jump scare. But before you start emotionally suing your past self, remember something. In January 2011, Bitcoin was not the obvious future. It was internet money used by a tiny group of programmers, libertarians, cypherpunks, and people with suspiciously strong opinions about banks. Bitcoin was cheap because almost nobody trusted it yet. There were no Bitcoin ETFs, no giant asset managers, no billion-dollar corporate treasuries. No celebrities pretending they understood decentralization. Buying it was awkward, storing it was risky, losing a password could mean losing everything forever. And most people thought the whole thing sounded like fake money from a message board, which, to be fair, is exactly how it looked. The reason $100 could buy so much Bitcoin is simple. The world had not agreed that Bitcoin mattered yet. Price is what happens when belief meets scarcity. And back then there was scarcity but not much belief. Then 2011 got weird. Bitcoin reached $1 in February. That alone felt historic. Then it kept running. By June, Bitcoin shot up to around $31. That means if you waited until the peak, your $100 bought only about 3 Bitcoin. Still amazing today, but very different from buying 333 Bitcoin in January. This was Bitcoin's first real bubble. People watched a tiny experiment become a mini mania, and then, like all good bubbles, it did the extremely rude thing. It crashed. After the June peak, Bitcoin fell hard. By the end of 2011, it was back around $4 or $5. Imagine buying at $31, watching your money drop more than 80%, and then telling yourself, yes, I will hold this strange internet coin for 15 years. Sure, very normal, totally relaxed behavior. This is why the fantasy is easy and the reality is brutal. Everyone says I would have held, but would you? Would you hold through crashes, exchange hacks, years of people calling it dead, news articles calling it a scam? Your friends laughing at you, your family asking if your computer money is okay. The hardest part was not buying Bitcoin, the hardest part was surviving Bitcoin. Because even if you had bought $100 in 2011, you would have faced years of temptation. At $1,000, your 100 could look like life-changing money. At $10,000, selling would feel responsible. At $60,000, holding would feel insane. And during every crash, your brain would scream you had profits and you lost them. That is the real lesson. Great investments do not just test your math, they test your stomach. So what if you bought $100 of Bitcoin in 2011? Depending on when you bought, it could be worth hundreds of thousands, over $1 million, or even more than $20 million today. But the bigger question is not whether you could have bought it, it is whether you could have kept it. Because in hindsight, Bitcoin looks like a straight line to riches. In real life, it was chaos, crashes, fear, doubt, and years of looking stupid before looking lucky. And that might be the most expensive lesson of all.